So in this video, I'm going to share 7 investments that you may want to think twice about before actually dumping money into these different types of investments. And this isn't to say that all 7 of these are going to be poor decisions 100% of the time. Sometimes they can be a good idea, sometimes they can be a bad idea, but in a lot of cases, the drawbacks of these investments can outweigh the benefits of these different types of investments I'm going to share with you in this video. And just keep in mind, this does not constitute as financial advice. This is just free information on the internet for anyone and everyone who's willing to listen. So let's get started with this. But if you're new here to the channel and you want to learn more about personal finance or saving money, making more money, consider hitting the subscribe button. We do our best to help people build a better financial future for themselves. So we really would appreciate it. So let's get started with this. And the first one that you may want to think twice about actually investing into, something that I generally tend to avoid, is penny stocks. Now, penny stocks from the outside can look like a really interesting opportunity, and honestly, they can be, but I want to caution you on penny stocks a little bit because there are some drawbacks or some downsides that not many people foresee, but it's something that you want to think about. The reason why I tend to not really like penny stocks is because there generally is less information about them than there would be with a company like Nike or Apple or Coca-Cola that are very much under the public eye. They have to report to the SEC, the Security Exchange Commission. So in a lot of cases, it's difficult for those companies to commit fraud or to do some other types of malicious activities. But with penny stocks, a lot of them are traded what's called over-the-counter. So it's not like traditional stocks, they're over-the-counter. So what this means is that there generally is going to be less information about them. It could be more difficult to actually get their financial reports. In some cases, not even available for financial reports, but they can also be susceptible to different types of scams, which is a reason why I'm not a big fan of them. One of them is something called pumping and dumping. You hate to see it happen. It still does happen, but essentially what happens is people will pump up the price of a stock by essentially buying it when it's, say, 1 cent per share, and then pump up the price by creating news about it, telling everybody to buy the stock, going on to forums, maybe going online somewhere, and getting other people to buy the stock. They pump up the price of the stock, and then when it gets up to the point that they want it to be at, say that it gets up to 20 cents or 30 cents, they sell. And they sell thousands of shares, and they essentially dump the stock. So they pump it, they dump it, and they usually end up in jail because it's illegal, but it does happen. So it's not something that I'm a big fan of. Now, that's not to say that it's always going to be a bad decision. If you look at, say, Monster Beverage, I believe, started off as a penny stock, and they're doing quite well now. They grew tremendously, and people who invested into the penny stock of Monster Beverage back in the day, back in, I believe, the late 90s, early 2000s, are doing quite well right now because they made a lot of money. And don't get me wrong, looking at penny stock and thinking, well, it's 1 cent per share. If it goes to $1 per share and I put, say, $1,000 in at 1 cent per share, goes up to $1 per share, I can have $100,000 off of a $1,000 investment. All it has to do is go up 99 cents. But you just really want to be careful with it because there are a lot of downsides to it. Now, you can totally go about this on your own, but if you're going to, just maybe start with a smaller amount of money. Just like with any of these investments, any investment whatsoever, when you're first getting your feet wet, start with a smaller amount of money to kind of learn the ropes of that different type of investment. That's just one piece of advice that I could have. So the next one that you want to consider kind of being a little bit wary of, or at least thinking twice about it, is investing heavily into collectibles. Now, I said heavily because it's okay to invest a little bit of money into some different types of collectibles, but putting all of your savings into, say, Star Wars figurines or certain types of stamps that you believe will be, very, very high value in the future can be a little bit tricky. And the reason for this is because it's pretty difficult to predict if people are going to want Star Wars memorabilia in 40 years. It might be a little bit difficult to actually predict that. And because of that, it's a little bit more speculative. So I'm not a big fan of that one as well. Now, there are certain types of collectibles that could be smarter decisions. You might be able to hold your value with some of these collectibles, but if you're buying baseball cards and you're hoping that the value of them is going to be very, very high in 40 years or 50 years, it's just difficult to predict it. So it's not something that I put a lot of money into. Now, it's okay to maybe put a little bit into it to diversify a little bit. There's nothing wrong with that. Now, the next one, the next worst investment that you can consider is BitConnect. Now, we're not talking about just BitConnect. We're actually talking about Ponzi schemes, pyramid schemes, or even in some cases, certain multi-level marketing schemes as well. So look, what it comes down to is whenever you see some type of investment, say BitConnect, oh man, I cringe every time I think about it, but this was essentially a multi-billion-dollar scam, really, that was going on within the online world about a year ago, a little bit over a year ago, year and a half, where essentially they were offering guaranteed returns of, say, 1% daily returns on your investment. Don't quote me on those precise numbers, but they were offering guaranteed returns if you were investing with them. And anytime you see guaranteed returns, especially when they're high of, say, 1% per day, which is considerably high returns, you want to be very wary of that. You want to consider, where's this money actually coming from? It's the biggest red flag possible when somebody's promising returns. But look, this happens not only with certain things like BitConnect, but also with Ponzi schemes like Bernie Madoff. He was regarded as one of the best investors at the time. He was managing billions of dollars worth of assets for a lot of clients, a lot of high-level clients, but it was all just a smokescreen. He was actually scamming people and creating a Ponzi scheme where essentially he was relying off of more money coming in to pay out investors as profits, but it was essentially actually just money that was coming in from new investors. So he had to continuously attract new investors, and it all went to crap when the Great Recession hit, and he had a lot of problems, and now he's in jail. But you want to avoid Ponzi schemes, pyramid schemes, and different types of activities such as those. Now, to see how these are actually working, to actually be able to identify them, there's a list of different things that you can kind of look at. But like I said, one of the biggest ones is guaranteed returns, returns that are looking astronomical, that are looking kind of out of place and wondering, where's this money coming from? And also the third one is, if they're not being upfront about how they're actually making their money, if they're not telling you how they're making their money, be a little bit wary of it and do a little bit more research into it to make sure that it's not a Ponzi scheme or a pyramid scheme. And that's just something that I think you really want to think about. Now, another mistake or different thing that people are kind of doing is by not diversifying whatsoever. So look, I've actually made this mistake in the past as well, but it's important to diversify to a certain extent. Now, you don't have to go crazy about diversifying and put money into 100 different types of investments. But if you, say, go too heavy into one particular stock, and like I said, I made this mistake in the past where I would put a lot of money in one particular stock, and then everything could be going well, company earnings could be doing very well, and all of a sudden there's a big scandal. Boom, company stock drops 30% and it slides down, or maybe there are certain lawsuits that go on with the company, something that you might not foresee, that if you have all of your life savings in one particular stock, it could really be a drawback and could end up hurting you over the long run. So make sure that you diversify a little bit. And like I said, this is up to you on what you actually want to do. You make your own financial decisions here, but consider diversifying a little bit. So just like what you wouldn't do with putting all of your money in collectibles, you don't want to put all of your money in one stock or all of your money in something else that could, say precious metals, because you don't truly know where it's going to be. And it's good to spread things out a little bit to create that safety, because if something tanks, one industry tanks, maybe your real estate investments could pick up for something that might be going down. So just something you want to consider. Now, another investment that people think is an investment that I just don't see how it's really an investment is timeshares. Now look, timeshares, it's just like a swimming pool. If you're going to buy a pool, it's nice to have, but it's not an investment. A pool's not an investment, right? So timeshares, they're not really an investment. A couple reasons for this. One of them is because it's not very liquid. It's difficult to sell timeshares, but also you're paying typically an annual fee to maintain that property. So you might get, say, 1 week per year for your timeshare for your property, and you own a piece of that property. But what does that really mean, and how can you actually benefit off of it? Well, 9 times out of 10, more than that, I believe, don't quote me on that as well, but a lot of times you can't actually sell your timeshare for more than you bought it for. It's very difficult to do that. So because of that, it's not bringing in any cash flow. You're not making any money off of this. And so it's just not an investment. It's okay to have them, although I personally don't really think that they're that great, but it's okay to have timeshares, but to view them as an investment is a different story. So just make sure that you make that separation there and aren't buying timeshares because you think they're going to make more money off of them in your lifetime. It's going to be very difficult to pull that off. So the next one is by investing into cryptocurrencies that you don't understand. Keywords there that you don't understand. It's okay to invest into cryptocurrencies, although I'm not a big investor into that myself. It's just not my personal preference. But I do have a lot of friends who are investing into cryptocurrencies, and they might be doing well. Some of them not so much, but others are doing well with it. Now, the key here is to make sure that you understand what you're actually investing into. And this is kind of the problem with the cryptocurrency market is that a lot of people will just jump into it with no idea what the currency actually does, no idea what it's about, who created it, although I guess nobody really knows who created Bitcoin, but really not much knowledge on the topic, and then jumping into it. Now, if you understand it, if you understand blockchain and you understand how it's actually functioning and how you could use this certain type of currency in the future, then maybe that's okay. But if you're just jumping into it because you think you can make more money off of it, you might as well just go to the casino and roll some dice or play some poker, because if you're totally speculating, then you're essentially gambling. Now, like I said, it's okay if you actually know how this currency is functioning and you see the prospects for it in the future, but just make sure that it's more something more than just thinking that you're going to make more money, or watching your friend make money on it and say, I want to make money on this too. No idea what it's about, throwing money into it. I just don't really think that's a great idea as far as investing, because the whole point of investing is to minimize risk while maximizing potential return. It's a two-part game there, so you want to minimize your risk as much as possible and maximize your potential return. That's why we make investments. And the final one here that we're going to mention in this video is the mistake that people make is when they're banking on pensions or Social Security payments for the future. Now, I believe it's about 85% of pension funds are actually still available even when a company goes bankrupt. So if you worked for Enron in the 90s and you're getting ready to retire and you're banking on that pension fund, and all of a sudden the company goes to crap, look, you'll probably still get that pension fund. Now, I don't know how that actually worked out for the employees of Enron, but most people, even when a company goes bankrupt, will get a pension fund, about 85%. But even at that, you don't want to bank on it. You don't want to bank on anything where somebody's promising you money in the future. Just like with Social Security from the US government, if you're 20, like myself, and you're hoping or expecting to get money from the government when you're in your 60s or 70s, 40 years from now, half a century from now, that's not a great idea. You don't want to factor that into your finances at the moment. So I don't even think about Social Security. That'll be just like a nice little stipend for myself if I actually get one when I'm in my 60s and 70s and 80s. Now, I don't believe that the government's going to just leave us dying on the side of the road when we're 92 because they say, sorry, we don't have any money for Social Security, even though you paid into it. I don't think that's going to happen, but you still don't want to just expect to have it. So just keep that in mind. I think that's a mistake that people make, banking on those. So that essentially wraps up this video. If you enjoyed it, if you found any value in it, thank you for watching. I really do appreciate all the support on this channel, and I'll see everybody in the next video.